Welcome to Stay Here, the ultimate arena where brands, companies, and industries go head-to-head. We dive deep into revenue, capital, and global influence to uncover who's confidently really on top. From billion-dollar empires to everyday favorites, Stay Here brings you the battles that shape our world. Stay curious, stay informed, stay here.
In today's rapidly evolving tech arena, two names stand out above the rest: NVIDIA and Meta. These companies are not just industry leaders, they are shaping the very foundation of our digital world, influencing how we work, communicate, and even imagine the future. NVIDIA is the powerhouse behind the AI revolution, supplying the advanced chips that fuel cutting-edge innovation across industries. From self-driving cars to breakthrough medical research, NVIDIA's technology is at the heart of today's most exciting advancements, making it an indispensable force in the global tech ecosystem. Meta, meanwhile, connects billions through its social platforms and is betting big on the metaverse, a bold new digital universe where virtual and physical realities blend. With platforms like Facebook, Instagram, and WhatsApp, Meta is not only shaping how we interact online, but also pioneering the next frontier of immersive digital experiences. Their rivalry isn't just about profits or market share, it's a battle over the very future of technology and how we'll live, work, and interact in a world that's becoming more digital by the day. NVIDIA acts as the essential supplier, its GPUs the gold of the AI rush. Every major tech player, from startups to global giants, relies on NVIDIA's hardware to power their most ambitious projects, making the company a critical enabler of progress. Meta, a consumer giant, shapes global culture and communication, now investing heavily in redefining digital interaction. Its vision extends beyond social media, aiming to create a seamless digital ecosystem where people can connect, collaborate, and create in entirely new ways. The stakes are enormous, with both companies charting different paths to tech leadership. Their strategies reflect contrasting philosophies, one focused on empowering innovation through hardware, the other on building digital communities and experiences. To truly understand their contest, we must look at their financials, their relentless drive for innovation, and the unique risks each faces as they push the boundaries of what's possible in technology. This is more than business. It's a clash of visions for our digital future, with the outcome set to shape the world for generations to come. On paper, Meta is the bigger financial force, generating around £110 billion in 2024, mostly from digital ads. This colossal revenue stream is driven by the company's ability to keep billions of users engaged on its platforms, such as Facebook, Instagram, and WhatsApp. By monetizing user attention through targeted advertising, Meta has built a robust business model that capitalizes on the digital age's insatiable appetite for social connectivity and content consumption. Its business thrives on keeping billions engaged and monetizing their attention. However, this model is not without its challenges. The digital ad market is highly competitive, and user engagement can be fickle, influenced by trends and shifting preferences. NVIDIA, with £48 billion in revenue, is growing at a breakneck pace, up 126% year over year, thanks to surging demand for its AI chips. These chips are the backbone of modern AI applications, powering everything from data centers to autonomous vehicles. NVIDIA's growth is fueled by its ability to innovate and stay ahead in the rapidly evolving tech landscape. Meta's revenue depends on the health of the ad market and user engagement, but faces slowing growth and more competition. The company must continuously adapt to maintain its dominance, investing in new technologies and exploring new revenue streams, such as the metaverse. NVIDIA sells the picks and shovels for the AI gold rush, supplying tech giants like Microsoft, Amazon, and even Meta itself. This strategic position allows NVIDIA to benefit from the broader tech industry's growth, making it a critical player in the AI revolution. Meta must innovate to keep its platforms relevant and fund its metaverse ambitions. The company is betting big on virtual and augmented reality, aiming to create immersive digital experiences that could redefine social interaction and online engagement. NVIDIA's challenge is to stay ahead in AI hardware as competition heats up. With rivals like AMD and Intel also vying for market share, NVIDIA must continue to push the boundaries of what's possible in AI technology. Both are making fortunes, but their business models and futures couldn't be more different. While Meta focuses on user engagement and digital advertising, NVIDIA is all about cutting-edge hardware and AI innovation. Their rivalry is a study in scale versus explosive growth. Meta's vast user base and advertising prowess contrast sharply with NVIDIA's rapid ascent in the AI hardware market, highlighting two distinct paths to success in the tech industry. When it comes to financial firepower, Meta brings in more money overall, thanks to its massive global reach and dominance in social media and digital advertising. Its revenue streams are broad, spanning billions of users and advertisers worldwide, making it a true giant in the tech landscape. But NVIDIA, while smaller in scale, is a profitability machine, an engine of efficiency that turns innovation directly into bottom-line results. In the last fiscal year, NVIDIA's net income soared to £23.5 billion on £48 billion in revenue. That's nearly a 50% profit margin, an extraordinary achievement especially in the hardware sector, where margins are typically razor-thin. Meta's profit was even higher in absolute terms, £37 billion. But it came from a much larger revenue base, resulting in a 34% margin. Impressive, but not quite as lean as NVIDIA's. One reason for this difference is Meta's heavy R&D spending, especially on ambitious projects like the metaverse. These investments are bold, but they also weigh down the company's margins. In contrast, NVIDIA's R&D is laser-focused on next-generation chips and AI hardware, directly fueling its core business and driving rapid growth in its most profitable segments. Meta splits its investment between sustaining its advertising empire and funding a risky long-term bet on virtual and augmented reality. This dual focus means balancing short-term profits with long-term vision. Meanwhile, NVIDIA's profits are growing at a breakneck pace, reflecting its central role in the ongoing AI boom and the insatiable demand for its cutting-edge chips in data centers and beyond. Meta's greatest strength lies in its sheer scale and its ability to absorb losses from experimental ventures, while still remaining hugely profitable overall. In many ways, NVIDIA is like a lean, efficient sprinter, fast, focused, and agile, while Meta is a marathon runner, with deep reserves and the stamina to outlast competitors over the long haul. Ultimately, their financial strategies reveal two distinct paths to tech dominance. One built on relentless efficiency and innovation, the other on scale, diversification, and the willingness to take big risks for even bigger rewards. NVIDIA's market value has skyrocketed to £3.3 trillion, joining the ranks of Apple and Microsoft. This isn't just about current earnings, it's a bet that NVIDIA will remain the backbone of AI for years. Meta, valued at £1 trillion, is still massive but now overshadowed by NVIDIA's meteoric rise. Meta's stock has been volatile, reflecting concerns over growth and its costly metaverse gamble. Meta holds £157 billion in assets, much of it in global infrastructure and reality labs. NVIDIA, with smaller assets but huge cash reserves, can move fast and invest aggressively. Investors are rewarding NVIDIA's focused growth, while Meta's valuation reflects both its profitable core and its risky bets. NVIDIA's edge is its relentless hardware innovation. GPUs like the A100 and H100 power today's AI breakthroughs. Its CUDA software ecosystem locks in developers, creating a deep moat. Meta's innovation is software-driven, from content algorithms to open-source AI models like Llama. By releasing Llama, Meta aims to shape the AI software landscape and foster a global developer community. Meta is also one of NVIDIA's biggest customers, buying hundreds of thousands of GPUs for its AI ambitions. This creates a unique dynamic. Meta fuels NVIDIA's growth while also trying to reduce its dependence on NVIDIA's chips. NVIDIA builds the engines. Meta builds the experiences that run on them. Their strategies intersect in the data center, where hardware and software innovation collide. The result, a symbiotic rivalry shaping the future of tech. NVIDIA's vision is to power every aspect of the AI revolution, from data centers to autonomous vehicles. Its new Blackwell chips are already sold out for 2025, showing insatiable demand. NVIDIA is also expanding into digital twins and simulation with Omniverse. Meta's boldest bet is the metaverse, a shared virtual world built by its Reality Labs division. The MetaQuest 3 headset is its latest step toward making this vision mainstream. Both companies are racing to lead in AI NVIDIA, with hardware and open-source models, Meta with Llama 3 and immersive experiences. NVIDIA wants to be the infrastructure for an AI-powered world. Meta aims to redefine how we connect, work, and play in virtual spaces. Their ambitions are vast, but their paths and risks are very different. NVIDIA's chips power AI breakthroughs worldwide, making it a strategic asset for nations and industries. But this centrality brings risks. Trade tensions, especially with China, could disrupt its growth. Competition is intensifying, with rivals and customers like Google and Amazon developing their own chips. Meta's influence is more personal, shaping how billions communicate and consume information. It faces regulatory scrutiny, privacy concerns, and debates over misinformation and mental health. Meta's biggest financial risk, its massive, ongoing investment in the metaverse, which continues to lose billions. If the metaverse fails, Meta could face a costly setback just as its ad business matures. Both companies are powerful, but neither is invincible. As of autumn 2025, NVIDIA leads the race, riding the AI wave with explosive growth and investor confidence. Its near monopoly on AI hardware sets the pace for the industry. But Meta is far from out. Its ad business funds bold bets, and its open-source AI push keeps it in the game. The winner will be decided by which vision prevails, the hardware that powers intelligence, or the platforms where we live our digital lives. NVIDIA's path is more certain, but depends on staying ahead technologically. Meta's is riskier, but could yield even greater rewards if its metaverse vision succeeds. This isn't a zero-sum game, both are shaping our digital world in profound ways. NVIDIA builds the infrastructure, Meta builds the experiences. Their rivalry will define how we work, play, and connect for decades to come.